Okay, guys, today we're talking about banking procedures. So a lot of this is going to be reviewed because we've been writing checks since the beginning of the year, but I know we haven't done that in over a month. The first banking account we're going to talk about specifically is going to be a checking account. Um, this is the one that's going to be used the most frequently, and because it offers such high liquidity, that's ease of moving in money in and out of the account. It usually does not offer any type of interest that you can earn. So accounts in order of liquidity within a bank usually go from checking, the most liquid, to savings, which have some restrictions. But because of those restrictions, you start to earn a little bit of interest. Um, Certificates of deposit actually have restrictions on time. So once you decide to purchase one, you're locked up for a certain period of time. That could be 3 months, 6 months, a year, 5 years. It all depends. Usually, the longer you tie up your money, the higher the interest rate you're going to get. Money markets are usually pay the highest because you're usually required a minimum balance and a minimum initial deposit. Could be anywhere from $3,000 to $5,000. But for these restrictions, you usually get compensated in interest. All right, so we discussed that checking accounts don't usually earn interest, not unless you're leaving $25,000 or more on deposit. Those are special accounts, and they usually come with fees unless you meet a certain level of standards as far as how many times you'll direct deposit during a given month. Okay, so a checking account is a demand deposit account. Okay, some of its pros: it is a very safe place to keep your money, relatively. So, depending on the health of the bank, it's a very good place to put your money. It is FDIC insured. That's Federal Deposit Insurance Corporation. Any dollar up to $250,000 is safe. Um, you will get back in the event of a bank failure. So the bank goes out of business, you still get your money up to $250,000. If you have any dollar over $250,000 and it's at risk. Now, there's many ways you can access your money, from going into the bank, talking to a teller, of course, writing a check. Usually you can get a debit card that's linked to the checking account. You can do all kinds of online transactions. And do many transactions at an ATM as well. Now, a check is a written order to a bank to pay the stated amount to a business or person that's stated on the check. It's a legal document. It's linked directly to your account, and we'll explore more when we take a look at the front of a check to see what some of those numbers mean and what they indicate. Checks are a lot safer, especially when doing large purchase of high priced items. It's safer than carrying a lot of cash in order to make the transaction. Um, and also a canceled check. Now, that I know that term sounds a little bit confusing. What a canceled check is, it means I've written a check to somebody, they've deposited it into their account, and that money has been withdrawn from your account, and that bank will now like send you a picture of that check as it's been cashed. Okay, that's what they mean by canceled. It's been used. It can no longer be used again. And the record of that canceled check can serve as proof of payment. Many times, if you're paying in cash and you don't get a receipt, it's your word against theirs whether you actually did pay a person or a counterparty or not. All right. In order to open a checking account, you can open them with a surprisingly low amount of money in some cases, but you have to read the fine print, because if you don't keep a certain amount in that account, you could be subject to fees. Now, when you're picking a bank, you want to know where you spend the majority of your time. So you want to look for banks that are near your house, but you also want to look for banks that might be near your school or your work. So ATM fees outside of your network are very, very expensive. It could be upwards of $6 on a $100 transaction. And those fees can add up over time. So we want to make sure that if I have to use an ATM, it's an ATM that's associated with my bank and I'm not charged any fee to use it. Now, when you open your account, following your initial deposit, your checks are going to be issued in standard blue. These won't be personalized yet, but you can personalize them later for a fee. And when you reorder checks, you do have to pay for them with money out of your account. Now, in the box of checks that you get when you open your account, there's going to be a check register. That's actually, if you've seen a checkbook, when you flip the checkbook open, on the bottom side, there's the checkbook, and on the top, there's a little fold down menu, similar to the things that we were filling out earlier in the year. They're two-toned. Okay, you'll have a light tone and a dark tone, and the light tone will be the transaction, and the dark tone will be where the running balance is going to be located. Now, in order to get this account opened up, you're going to need some personal information. Name, address, phone number, social security, driver's license, picture ID, proof of residence as well. So you might need a bill to show where that you actually live at the place that you say you do. Now, one of the things you can open up, probably even now, is a joint account. So an account under your parents' name. And that's an account that's owned by two or more people, and either person can withdraw funds or add funds to that account. Now, let's talk about the checkbook register. Checkbook register is not used enough by many adults, but it is the most accurate representation of what should be in your bank account when all transactions clear. So it's a tool that's used to track checking account transactions. It's a record of payments, purchases, deposits, and the running balance shows you the amount you can write checks against without bouncing it. Now, a deposit is any type of money that is being added to your account, either your checking or your savings. Now, it could be an electronic transfer. You could be depositing checks, cash, direct deposit. Any money entering your account is going to be deemed a deposit. Now, the running balance, or what many people will just say, do you want to check on your balance? What they're really talking about is your running balance. That's the amount of money that will be in your account once all checks, payments, and deposits clear. So what I have written in my checkbook register is more accurate than what my bank actually knows. My bank actually knows only what's actually happened, it does not know what will happen. So if I wrote a check to somebody and that person just hasn't gotten around to cashing it, the bank doesn't know that, but your check register will reflect it. Okay, so that's why a good habit to get into is fill out the register before you write the check. Many people, they're in a hurry at the grocery store, and they just want to make the purchase. They don't want to hold up the line, and they write the check and they never go back and add the transaction to the register. And that's when you put yourself at risk of any type of accidental overdraft. Okay, overdraft fees, they're pretty brutal. There's a bounce check fee. That's on both ends. It goes to you for writing the check and not having enough money, and it goes to the person you gave the check to as well. So you'll probably have to reimburse them. So, not to mention that a bounce check can hit your credit report, and that can make the cost of borrowing in the future more expensive. Now, when we take a look at the top of a checkbook register, up in the top here, there's going to be the balance. This is either the initial balance when you open the account or the balance from the end of the previous page. So you start with what was in your account up here, and now each two lines will represent one transaction in your in your check register. So the code will go right here. If I'm writing a check, I'll write the check number in the top line, the date it happened, who I made the check out to, and underneath that, I'll put why. Okay, so I could say Acme and then underneath for groceries. I just want a little reminder of why I was making the transaction. Now, if money is going into your account, it goes into the additions or deposits or interest here. If money is leaving your account, it's going into subtractions. Now, the transaction itself, so if I was writing a $100 check for groceries to Acme, the $100 would go here in the top lighter toned line, and then you would subtract it from whatever your previous balance was to get the new balance or the new running balance, which will be in the darker toned section here. It's darker tone and it's easy to find. So you always go to that last line and you know how much money should be in your account. Now, this is different in each account or from company to company, but there's usually some kind of code. So if I was writing a deposit, I'd just put a D right here. If I was using my debit card, I'd write DC. If I was doing any online banking, I could do PC. So these codes are different from bank to bank, and they're really for your record keeping. It's not like it's a legally binding thing or anything. Okay. Now, a debit card is linked to your checking account. It operates just like you've written a check, okay? And the money is immediately withdrawn from your account to pay for things at stores, grocery stores, and whatnot. Now, you can set up automatic withdrawals. These are two ways you can save on writing checks. Again, you will have to repurchase checks. So if you can save yourself a little bit of money by using your debit card every now and again, or setting up automatic withdrawals, they add up over time, and they also, even if I'm doing rent and car payment, you're saving 55 cents on a stamp every month by setting up an automatic withdrawal. So money is deducted directly from your account and transferred to another counterparty. I usually have these all set up on my my mortgage, my car payment, car insurance. Trying to think what else. Gas, electric, and cable. There might be a couple others. These are things that I do not want to be late on, so I make sure that they're automatically withdrawn a day or two prior to the due date. So the advantage here, you don't have to write a check every month, so you're saving yourself on postage, just traveling to the post office, and stationery as well. Disadvantage, if you don't enter the automatic withdrawals into your checkbook register, we could run the risk of bouncing a check. Also, since these are so easy and convenient, we might forget that they're about to happen. So make sure that if your car payment goes out on the 15th, make sure there's money in the account to cover that on the 15th. Okay, moving on. So this was the front of a check. So there's some key pieces of information here. So this is going to be the check number. If you're writing the check, this needs to go in your checkbook register. The date you are writing the check, not the date that the bill is due. This is the date I'm physically writing out the check is going to go here, and who it needs to go to. It could be the person or the counterparty or whatnot. My recommendation, again, kind of like it's in the bottom line here, is if there's room here, fill it out with a line. Okay, make sure that no one can alter the check. Even though the use of checks is going down and therefore check fraud is going down to some degree, it's still out there. Okay, now in this box number 4, you're going to write the amount that you're paying in numbers. And again, many times, just so there's no mistake and nobody misreads that as a comma or anything, I underline the change and then I'll draw a line all the way out here. Then after you've written it in number, we're going to write it in words below. For the 0 cents, you guys know I like to do the 00 over 100 and then line all the way out. Now, the memo line is not legally binding. It's the only part of the check that's not legally binding. Everything else, it's considered a legal document. Over here, you can write a memo to yourself on the reason why I was writing the check. Anytime I'm paying a bill, okay, I'd like to put my account number right here in case the coupon that I'm or the ticket that I'm trying to pay, if it ever gets separated from the check, they still will credit my money to my account number. Okay, they're going to cash your check either way. Just make sure that they credit your account when they do it. Now, your legal signature is going to go down here. Okay, it should match your signature card when you open your account. Now, some of the numbers down here, which may not look like they make a lot of sense, the first number right here is called the routing number. And this is basically where the money is going to travel through what Federal Reserve Bank does the money travel from your checking account to somebody else's. Here, I know these are all ones right now, but this section here would be your actual checking account number. If anyone has this checking account number, you can make a fake ID pretty easy. They could go take some money out of your account without you realizing it. And so you have the routing number where the money is going to travel through, the checking account which it's going to come from, and then down here is the check number. Okay, and once this check has been used, it can no longer be used again. Okay, now one of the activities that we're going to do today is I gave you a Google Doc that has a list of transactions and a Google Sheet, which I tried to make look like your checkbook register. Okay, you're going to take the transactions that are listed in the Google Doc and enter them into the Google Sheet. You're going to be submitting your Google Sheet through Schoology. And if you have any questions or problems or have any issues with it, remember Schoology can be buggy from time to time. So just shoot me an email if there's any problems, and we'll do our best to work around. Okay, guys, have a good day.